Welcome. In this video, will ZBCN coin rise again? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
As can be clearly observed on the chart, the price is moving in line with an upward sloping trend line over a specific time period. This uptrend has previously acted as support multiple times and has triggered upward bounces whenever the price touched it. These types of ascending trend structures are closely monitored by investors and are often considered the starting signals of positive price action. Especially in technical analysis, the directional guidance provided by trendlines forms the basis of many strategies. Current market behavior also confirms the strength and effectiveness of this trend. Every time the price approached this rising trendline in the past, it faced significant buying pressure and quickly produced upward reactions. This shows that market participants view this trendline as a demand zone and are inclined to open positions in these areas. At present, the price is once again trading very close to this important ascending trendline. If the price touches this trendline again, there may be potential for another upward bounce similar to past patterns. Such structures generate important signals, particularly for short and medium-term trading opportunities. Trend supports are among the strongest references for determining price direction. If the price continues to find buyers at these levels, it will be considered a strong technical confirmation that the uptrend may continue. On the other hand, maintaining the ascending trendline without a breakdown is also a significant indicator that the market still holds positive expectations. A trendline derives its meaning not just from a few touch points, but from the volume of trades and the price reactions at those points. In this context, the fact that this current trendline has held in the past and may potentially hold again today highlights a key opportunity zone that investors are closely watching. Additionally, this uptrend is not just a simple support line, it also reflects investor psychology. The price continues to make higher lows, gaining upward momentum and signaling that bulls are still in control of the market. These kinds of structures represent ongoing confidence and buyer dominance. When the price touches the trendline again, this point may be perceived as an opportunity zone by buyers, potentially triggering another round of strong upward movement through increased volume. If the trend holds, it is highly likely that the price will bounce and head toward upper resistance levels once again. Markets tend to repeat past behaviors within these technical structures. Since past interactions with this ascending trendline have led to upward price reversals, the repetition of this behavior becomes a common expectation among investors. This means that when the price approaches the trendline again, it may face renewed buying pressure. Furthermore, the upward direction of this trend indicates that the supply-demand balance still favors the bulls. If the price touches this trend again and initiates an upward move, this movement may not just be a short-term correction, it could also signal the beginning of a new upward wave. Especially when analyzing previous price actions, there are notable instances where the price gains significant momentum following these trend touches. In this regard, it is very natural for investors to develop a positive outlook if the price reapproaches and holds this ascending trendline. This trendline should not only be considered a technical structure, but also a psychological threshold. When the market's overall perception is aligned with holding these levels, emotional expectations are activated alongside technical indicators. This increases the likelihood of the price resuming its upward movement. In addition, the angle of the trend is as important as its direction in technical analysis. In this case, the steepness of the upsending trend is also significant for evaluating price momentum. If the trend is steeper, the chances of sharp price bounces increase, while a flatter slope suggests a more stable and sustainable rise. When compared to historical data, the current structure strongly suggests that the price has the potential to gain momentum again by taking support from this trendline. Another important point at this stage is volume data. A noticeable increase in volume as the price approaches the trendline will indicate that buyers value these levels and are actively trading. This strengthens the possibility of a price bounce. If a volume spike becomes evident while approaching the trendline, it not only signals a technical support level, but also a strong rebound zone. In summary, the ascending trendline that the price is currently approaching holds great importance from both a technical analysis perspective and an investor psychology standpoint. A renewed reaction from this trendline will not only indicate a short-term recovery, but also confirm the current uptrend and potentially signal a move to higher levels. If the price manages to stay above this line, investor optimism will strengthen, adding momentum to price action and paving the way for new highs. Therefore, this trendline should not only be considered a reference point for today, but also a central focus for potential price movements in the near future. But we can't rely solely on trendlines to make analysis decisions. Let's take a look at other metrics as well. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you'll receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
Resistance zones, which are among the most closely followed structures in technical analysis, are key points where investor psychology tends to concentrate. Especially levels that have been tested multiple times but failed to break often turn into strong resistance lines and become prominent on the chart. In the current setup, a resistance level located above the price action can be observed, a level that has proven difficult to break in previous tests. The fact that this level has been tested multiple times without a successful breakout clearly indicates that it's one of the most contested areas between buyers and sellers. However, this doesn't mean it will always remain a barrier. Resistance zones are merely temporary obstacles, and once enough momentum builds, breaking through becomes inevitable. Looking at recent price action, it is notable that during the last test of this resistance level, the price failed to break through and pulled back. At first glance, this may seem like a negative development, but from a technical analysis perspective, it actually signals a constructive and healthy correction. Prices never move in a straight line indefinitely. Rather, the hallmark of a healthy trend is the presence of periodic corrections and breathing phases. These pullbacks often present buying opportunities. Thus, the latest retracement could be seen as a preparatory phase for a new recovery wave, particularly when accompanied by weak selling volume and strong buying responses from support levels. This view is further reinforced by other key technical details. In the upcoming period, there's a high probability that this resistance level will be tested again. The bounce from the current support zone shows that buyers remain active and that market sentiment still leans bullish. In technical analysis, the more a level is tested, the more likely it is to eventually be broken. With that in mind, if the price approaches this resistance zone once more, the probability of a breakout is higher compared to previous attempts. Notably, a surge in volume during such a resistance breakout would provide a stronger signal of sustainability and momentum. In such a scenario, if the price breaks through this critical resistance, there will be a significant technical upside potential. These resistance areas are typically where investors take profits, hesitate to open new positions, and exhibit risk-averse behavior. But once such a level is broken to the upside, the psychological barrier is removed, and a large portion of market participants begin to align on the idea that prices could reach new highs. This not only increases buying pressure, but also allows the price to accelerate upwards more rapidly. In this way, a resistance breakout becomes not just a technical milestone, but a psychological turning point as well. Furthermore, historical data supports this scenario. In many previous instances where similar setups occurred, meaningful and sustainable price increases followed resistance breakouts. This showcases the statistical reliability built by technical analysis over time, especially when former resistance levels turn into support after being broken and prices consolidate before moving to new highs. It validates the notion that the breakout is part of a healthy uptrend. It is also crucial for investors not to panic during this process. It's rarely expected for a resistance level to be broken on the first try. In some cases, the price may test the level several times and trade sideways for a period. This gives the market time to absorb the level and establish a new balance. Investors who remain patient and stick to their strategy during this phase often benefit from significant price movements. Therefore, retracements from resistance zones should not be interpreted as weakness, but rather as a phase of strength accumulation. Especially when volume-based analysis shows noticeable increases and positive divergences, the probability of a successful breakout rises even further. These types of technical indicators help investors strengthen their positions and act at the right time. In the current setup, the price is once again approaching this resistance zone. Buyers appear to be gaining strength and selling pressure is fading. All of these factors suggest that an upward breakout in the coming days is highly likely. In conclusion, the current technical outlook shows that the price is once again on track to test the significant resistance level that it previously failed to break, and this time the probability of a successful breakout appears much stronger. If this resistance is breached, a wide upside space will open up ahead of the price, offering new opportunities for investors. Therefore, the current pullbacks or sideways movements should not be seen as signs of weakness, but rather as part of a preparatory phase for a strong upward move. For investors who take a patient and disciplined approach, these types of resistance breakout scenarios offer strategic opportunities that could yield substantial returns in the medium to long term.
The MACD indicator is one of the most important technical analysis tools that provides strong signals for trend reversals or trend continuations in the market. This indicator, particularly by measuring the relationship between short and long-term moving averages, gives investors clear insights into the direction and momentum of the price. Especially in cryptocurrency markets where volatility is high, signals from the MACD play a crucial role in investors' decision-making processes. Looking at the current situation, it can be observed that a correction phase or a consolidation period is taking place as the MACD line has crossed below the signal line. However, such crossovers often represent only temporary selling pressure for investors and are generally preparatory phases for a renewed upward movement. In such cases, the MACD line and the signal line tend to converge in lower regions, and this convergence could be a precursor to a new bullish crossover. If the MACD line moves parallel to or very close to the signal line for a while, this may indicate that the market is in a decision-making phase and a strong directional move is imminent. In this context, the current bearish crossover should not be interpreted as a panic signal, but rather as a potential precursor to a larger upward wave. These horizontal or compressed periods in the lower regions are among the technical structures that, as seen many times in the past, set the stage for sudden and strong moves. Especially when examining the times when the MACD previously rebounded from lower levels and crossed above the signal line, it can be seen that the price also moved up rapidly along with the crossover. Therefore, the current sideways movement or minor downward gap in the MACD could be indicating that the market is gathering strength. It is important for investors to remain cautious at this stage and analyze the tendency of the lines to converge. Because if the MACD crosses the signal line from below once again, it could act as a catalyst to ignite an upward move. Looking at past price action, it's been observed that rallies following similar crossovers have often been quite strong. A signal like this becomes even more powerful when supported by volume and may lead investors to take long positions. Therefore, while the current downward trend may appear to be a selling opportunity to some investors, technically it could indicate the formation of a new buying opportunity. Particularly if the MACD histogram bars start shrinking upward from the negative region, it may show that momentum is gradually turning positive. These histograms generally reflect the internal energy of the market, and they often flatten before turning positive and signaling a potential uptrend. This technical structure often represents the starting points of major market movements. The behavior of the MACD indicator has been tested many times in the past, and each time it has signaled significant price movements. For example, following a similar MACD decline in the past, the price rose by 30 to 40% within just a few days. Such examples help investors approach technical analysis tools with greater confidence. Additionally, the convergence of the MACD lines at lower levels may suggest that a positive divergence is near. When this is analyzed alongside the price holding at strong support levels, it forms the groundwork for a strong bullish scenario. If the prices also bounce from a solid support and the MACD is preparing for an upward crossover, this dual confirmation can be one of the strongest buy signals. It's important to remember that the MACD indicator is not just about the lines. The histogram also provides highly valuable insight into market momentum. In the current setup, the fact that the histogram bars are gradually shrinking near negative levels may suggest that selling pressure is easing and buyers are starting to gather strength. This indicates that the price may be gaining the momentum needed for an upward move. Such situations are often described in technical analysis as the calm before the storm. In other words, even if the price seems calm, this MACD structure could be signaling a coming rally. Especially in cryptocurrency markets, these structures are frequently observed and often result in sharp and sudden price increases. If the MACD line crosses above the signal line in the near term, and this crossover is supported by positive news or increasing volume, then the price could be set on solid technical ground for a significant rally. In such a case, it is crucial for investors to properly analyze these technical signals, avoid panic selling, and consider the potential upside of the crossover. In these scenarios, the MACD indicator has the capacity to provide early signals of market reversals. In the current outlook, the flattening and slight convergence of the lines in lower regions may be the initial signs of a new momentum move. If this move results in an upward crossover, as seen in the past, the price may move sharply higher and present substantial profit opportunities for investors. In summary, the current MACD structure suggests more of a preparation for a rise rather than a decline, showing that investors should trust the technical setup and continue their strategies with patience. We should wait for the lines to cross upward.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.